Hello, everybody, and welcome to our second podcast in our NatWest Markets U.S. election series. This is John Briggs, Head of Strategy for Americas, and I'm joined once again by Brian Dangerfield, co-head of G10FX. So we're halfway through the first four primaries on our way to Super Tuesday. And Brian, what do you think so far?
Well, I think it's pretty clear that momentum has been a pretty critical part of this process. And we know there are a couple of candidates who have really stood out in the early going and a couple who have really underperformed. So starting with the strong performers, Vermont Senator Bernie Sanders has clearly taken the reins of the progressive wing, whereas on the moderate side, the real story has been the underperformer, which is former Vice President Joe Biden. So in a lot of ways, the race is very wide open at the moment, with the moderate wing being really competitive between Pete Buttigieg and to a lesser extent Amy Klobuchar. And then of course we have Mayor Bloomberg not on the ballot until Super Tuesday, sort of waiting in the wings and perhaps benefiting from some of the chaos and the lack of a real frontrunner emerging through the first two votes.
So I think you bring up an interesting point when it comes to like moderates versus progressives, because as listeners to our first podcast know, that's the lens through which we're looking at this primary, is whether the Democratic voters as a whole choose to go with more of a progressive candidate or to a more moderate candidate once we come out of Super Tuesday. So if you look at, for New Hampshire, for example, Iowa being a little bit of a mess, the moderate share of the vote was actually 53%. And that's just Biden, Buttigieg, and Klobuchar, and doesn't even include Bloomberg because he wasn't on the ballot there, whereas the progressives is obviously Warren and Sanders. So you mentioned Sanders, you mentioned momentum. One of the things that you had discussed previously was momentum out of Iowa got derailed a little bit on the positive side. But Warren and Biden have to be feeling the negative momentum right now, right? When do you think that they're going to be dropping out, if they do?
Well, absolutely, the pressure is on Joe Biden. We talked a lot about in the first podcast about why narrative is so important, and nowhere is that more important than for Joe Biden's campaign, because the narrative around Biden now is that he was a front runner and this race is really slipping away. He actually left New Hampshire to go right to South Carolina to begin campaigning, essentially skipping over Nevada, which is the next caucus state. I think the chances that most candidates stick around through Super Tuesday is pretty high. There's too much on the line on Super Tuesday with two of the biggest states in particular, California and Texas, voting on Super Tuesday, which is March 3rd. So I think all of the main candidates who are in contention, even those who are lagging behind, probably stick around at least through Super Tuesday. But after Super Tuesday, if you don't see a big momentum boost from Joe Biden out of either Nevada or South Carolina, which have a larger share of minority voters, which have tended to favor Biden, at least in early polling, if you don't see some real moves higher into and through Super Tuesday, that could be really when we start to see a reduction in the number of candidates vying for the nomination.
Yeah, I know. From my perspective, the fact that Warren didn't do so well in a neighboring state, sure, Sanders really was pulling well ahead of that, but, less than 10%. And then for Biden, his whole pitch, like you said, what's the narrative for him, right? His whole pitch has been that he's the most electable against Donald Trump. To not receive even 10% of the vote when you're pitching yourself as the most electable one, it's just not a good showing, I think. But like you said, we still have two of the more minor states before we head to Super Tuesday. Stepping back a little bit, what do you think? Do you think that we're going to come out of? Well, let me restart. My view has always been that we're not going to have a brokered convention. But if you look at things like predictit.com, the odds of a brokered convention have gone up quite a bit. They're actually just under 50% at 45%. What's your view on this? Do you think that we're going to have, now that we're separating a little bit, is that separation going to continue, or is it just going to continue to be more muddied?
Well, I think it's going to continue to be more muddied at least through Super Tuesday. Super Tuesday is really going to be the moment where we know pretty definitively if we're moving in the direction of a candidate or we're moving in the direction of a brokered convention. So, as you mentioned, John, coming out of New Hampshire and Iowa, there doesn't feel like there's one really definitive frontrunner. In fact, even the winning candidates in both Iowa and in New Hampshire didn't even get over 30% of the vote. So no candidate got a majority in either state. And so there really isn't a definitive frontrunner. Now, Super Tuesday can really change a lot of that. And a candidate like Joe Biden will be looking in particular to gain some momentum in these later states as we approach Super Tuesday on March 3rd. But March 3rd is still the moment when we're going to have a much clearer view of what the delegate count looks like heading into the convention. So it's too early to say that we're going to get a brokered convention because momentum matters a lot. and a lot of delegates are going to be handed down on that March 3rd date.
All right, speaking of front runners, I mean, I have to say, I think the real victor out of all of this so far between Iowa and New Hampshire is Trump. What do you think?
Well, certainly that's what the betting markets are telling us. If you look at a website, Predict It, they gave the odds of the Republican candidate, and of course Trump, winning the election 52% on February 2nd, the day before the Iowa caucus. That's now up to 57%, which is the highest in at least the last 90 days. So the market is clearly moving in this direction as well. Anecdotally, I get the sense, and I'm sure you, John, as well, have gotten this sense from clients that we speak to, that the market's perception of Trump winning is probably a lot higher than 57%, if that's really where the odds for Trump winning are. So the market has certainly moved it in that direction. And of course, that has important implications for how markets should interpret the nomination contest, because at the end of the day, what really matters is who ends up as the president in January of 2021, and less so about which candidate is ultimately vying for that spot from the Democratic side.
I think you bring up a good point. I mean, first of all, we had a year-end investor survey. 70% thought Trump would be reelected, and I would be shocked if that actually went lower, given everything that's happened. And the other point you make, which is important, is just the market impact here when it comes to Trump, or at least even just after New Hampshire. We've seen risk assets perform well. Doesn't seem to be much fear, as you said. The betting markets have Trump's chance of victory rising. You could take that two ways. I mean, the first way you could take it is, and I think this is a relatively consensus view, is that and I tend to agree with it actually, is that if Sanders ends up becoming the nominee, that Trump's going to win relatively easily because the country as a whole is not quite ready for a socialist. I mean, that's definitely a market narrative. So Sanders winning, even if it's only by a small margin, and even if the progressives in general had a lower share overall than the moderates, the fact that Sanders was on all the newspaper headlines probably helped calm some market nerves this morning. I mean, the other way to look at it, which I do think there is something to this, is the fact that Trump himself, as you said, had a pretty good showing in New Hampshire. I mean, what did you tell me this morning? Something like 100 or 100,000 people or 120,000 people voted for Trump, whereas the whole total Democratic votes cast were 278,000. I mean, Trump's unopposed, right? Yeah. And he still had that many people showing up. His rallies have been crowded. It's no accident that he's throwing rallies in all these states while the Democrats are out trying to get votes out. I mean, his base is energized. I don't know if that's, what do you think of the impeachment stuff, or just that the economy or loyal to it, but I don't know. It seems to me like it's Trump's to lose. What do you think?
It's certainly a combination of factors, but the impeachment to me feels like something that's really energizing Republican support in favor of Trump. Trump loves to tout his popularity among Republican voters. That's certainly on display at the moment. Republican voters who see the impeachment as an improper way of Democrats trying to get rid of Trump are certainly registering their displeasure with that at these rallies. But Trump does have a lot of momentum. The economy right now is on his side. Our House view is that the economy does slow heading into the middle and later this year. And that's something that could reduce the market's implied odds of President Trump retaining the presidency. But at the moment, President Trump has a lot of momentum that's reflected in betting markets. I think that's also reflected in asset prices as well. You look at the dollar, for example, continuing its ascent against the euro and other currencies across emerging markets. That's probably, a lot of that is linked into strong U.S. data we've gotten at the beginning of the year. Also coronavirus fears lowering growth expectations globally, but also probably tied in there is political risk premium not really being priced in a major way, because the market is assuming that President Trump's likely to win. That probably means continuity of policy rather than a major shift in the government business balance that could come with a President Bernie Sanders.
So I guess the question then is, if Sanders doing well along the market narrative means that Trump's probably going to get reelected, and we still have a wide field of candidates, perhaps even through Super Tuesday, what could bring political risk premium into U.S. assets? Is it the economy slowing, thus hurting Trump's chances? Is it a Trump gaffe? I mean, or is it just something that we're not potentially going to see even to the summer?
Well, I think we should consider that the Democratic Party would likely rally behind whoever the nominee is. So I like to call President Trump's takeover of the Republican Party a hostile takeover. He was not particularly popular among the establishment Republicans when he was trying to become the nominee in 2016. Clearly, Republicans have gotten behind President Trump, and he has changed the Republican Party. Bernie Sanders could really do the same to the Democrats. Right now, we talk about how Democrats are not united around some of Sanders' more controversial policies. But if he becomes the nominee, Democrats might move in that direction. And like you said, if the economy does start to slow and the Democrats do end up uniting behind Sanders, I think the market's going to have to price in a greater likelihood that a Democrat does take the presidency at the end of this year. If you look at polling from Quinnipiac, for example, that was out this week, it showed that most Democratic candidates would beat Trump in a head-to-head matchup, depending on how much you want to believe that polling. At this early stage of the cycle, we know there was an issue with under-appreciating Trump's chances in the polling in 2016. But when we get into November, there will still be two major candidates on the ballot, and the polling might be telling us that Democrats have an advantage. And so the market's probably going to have to price in election risk premium. For us, it's really a question of when does that happen. So far, that has not happened in any meaningful way.
Thanks, Brian. All right, I'm just going to close with this one last thought, which is that markets are going to do what markets are going to do. But as long as there's a potential shift in the White House, no matter how long the odds, even if it is just a Sanders-Trump, and markets assume that that means that Trump's going to win, in the C-suites and your corporate offices, it's going to be very hard given past surprises like Trump's original victory, like Brexit, like these other votes that we've seen all over. It's going to be very hard to expect business leaders to get aggressive or ambitious on hiring or corporate investment. And I think that's one of the reasons why we do think the economy is slowing is election uncertainty. So even as markets go back and forth and as betting markets change their predicted odds and all of that, we do think the election is going to be an ongoing concern when it comes to the business side of the economy. But that's enough for now. We'll check in after Super Tuesday. Thank you for listening.
Thanks.